ठीक है तबियत। Yeah, good morning, everyone. So we saw yesterday across the board all market declining. Also, US came off with all other markets coming off by around 1.5%. And today morning, even the commodities are feeling the heat. The commodities are also down, wherein oil is down by almost around $2 from yesterday's same time. And even iron ore and steel are down by around 2% each. Dollar index has shown sign of moving up in last few days. Now it is at around 2.6, and yesterday and today also it is showing more of a moving up, and that is having impact on the commodity, and the commodities are coming off. Uh, Apart from US, there are some concerns emerging in China as well, wherein the stimulus people are expecting, and it's not coming off. As such, are feeling some concern about that, whether the stimulus will be there or not. So we are seeing corrections across the board again today in Asian market. Today we may see some sideway movement in Indian market, or maybe marginal correction more can continue. Uh, that's all from me. Lion, I'll request technical people to take up from here.
Yeah, thank you, sir. Good morning, all of you. Yesterday we saw that market correct and break important level, that is 19,600, and close below that important level. So we expect some pressure to be continued coming 1 to 2 trading session also. Next immediate intraday support is placed around 19,440. Below that, we expect pressure will increase towards 19,370, 19,300. The next major support place in 19,300. So at Nifty trading in the range is 19,300 at downside, and upside immediate resistance place right now is 19,600 and 19,700. So Bank Nifty also break important level and break yesterday and close that important level below. So we expect some pressure to be continued Bank Nifty also. It comes around downside first support 44,800. Below that, we expect further sell off towards 44,200 and 400 at downside. Upside 45,500 first resistance for Bank Nifty. In Nifty, Finance Nifty also break the important level, that's 20,200, and close below that level. We expect this pressure will be continued towards 20,050 and 19,978 downside. So all three index break important support zone. So we expect some pressure to be continued in all three index. Stock specific, Tatacom looks weak, trading in overbought zone, and last two trading session we saw that some pressure and some profit booking. But yesterday's break important support zone, that is 1760, and close below that level. So we expect some pressure in Tatacom to be continued towards 1700 and 1680 level at downside. Upside 1785 is a major resistance for Tatacom. Second, Ultratrek also trading in upper zone. Uh, we expect some profit booking place in Ultratrek also, but one immediate support place around Ultratrek cement is 8230. If Ultratrek break today's 8230, then we expect some pressure towards downside around 8,000 and 7,800 at downside. Upside 8340 is the first immediate resistance for Ultratech. Buy side, Loris Lab looks positive. Weekly chart showing a positiveness and break the downward trend line around 360 and yesterday close above that level. So Loris Lab looks positive at current level. We expect this momentum to be continued towards 390, 400 and upside. And first immediate support place around 350. That is for technical derivative I can get.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as you're seeing that the Nifty was continuously holding the support of 19,500 level and is about to break that level. We are seeing that the major call rider positions are now getting added up near 19,500 to 7 strike. Almost around 25 million positions has been created from the call rider front in this three strike in yesterday trading session. While the put rider positions, we are seeing that still it is holding at 19,500 level, but in today's session, if Nifty is closing below 19,500 level, then we will see the shifting towards 19,300 and 200, well, where the next support will be placed for the market, while PCROI is having support at 0.72 to 0.68 level. In today's session, PCR is likely to drop around 0.72 0.06 basis point, while India VIX yesterday shoot up sharply towards 11.28. While if India VIX goes about 13.5 level, then the major shorts will be created in the market. Still, we are seeing that a Nifty is giving a support on the downside towards 19,300 to 200 level. So for next 2 to 3 trading session, we expect market to be in the a negative front, while more profit booking will be witnessed in today's trading session. Once if any pullback comes towards about 19,600 level, then we might see on the spot basis, then we will see again the buying will be confirmed in the market, but till that point of time we should be on the cautious front. While on the stock specific front, we expect selective stocks like Apollo Tire, VDL, Ramco Cement, these three counter, we will see some major profit booking in today's trading session. So that's it from the derivative front. Thank you.
Good morning. Today, one IPO will be opening, SBFC Finance, and it will close on 7th August, Monday. We have given subscribe rating. Price is 54 to 57, and total issue size is 1,025 crores, of which 425 crores is the OFS and 600 crores is fresh issue. SBFC Finance has a total loan book of 4,400 crores, of which 78% is towards SBL, that is small business loans, where average ticket size is 10 lakhs, while the balance loan book is towards gold loans, where the average ticket size is around 90 odd thousand. This segment of low ticket business loans is one of the fastest growing segments and is a difficult one to establish and execute, especially with regards to underwriting capabilities for this segment, which acts as a durable competitive advantage. And thus, SBFC faces low competition. This is the same kind of segment where companies like AU have been operating since 2 decades of 10 lakh ticket size, self-employed customer. Similarly, Equitas is also there. Five Star is also there, but Five Star's ticket size is much lower at 3 odd lakhs. Even Aptus Value, one third of its book is towards this segment, and similar kind of ticket sizes. So these are the companies here. Uh, so this strength, business strength, is reflected in the yields that are being charged, which is at 16% and net interest margin of 9%. We also observe that the return metrics are lower when we compare it with other comparable peers like Aptus, and not even Aptus, even affordable housing companies where ticket sizes are very similar, like Awas and Home First. and even five-star. So these companies have a higher ROE of 15-16% and upwards of that compared to SBFC's ROE of around 10 odd percent. One of the reason is to do with lower leverage currently, whereby ROE is around 3 odd percent. Uh, and another major reason is that over last couple of years, company has invested heavily in its OPEX, and which has resulted in bloated kind of cost ratios. So we expect that as the company gains scale, the cost will be absorbed and cost to income will come down, leading to expansion in return ratios going forward. And on the other hand, if we look at growth, then SBFC has demonstrated much higher growth than these other companies. Loan book has grown at 46% CAGR over last 2 years. And Also the base is very low compared to other companies at 4,400 crores of AUM. So the runway for fast growth seems to be big. So yeah, on the other hand, if we look at valuations, it is being offered at a discount to listed comparable peers on price to book basis. So we feel that there is good listing gain to be made in this company. So we have given subscribe rating. On the result side, Mass Financial result is in line with expectation. Loan book grew 26% year on year and 4% QOQ. All P&L parameters also grew in line with the loan book. That is, the net interest income profits have grown at 25% year on year and 5% sequentially. Credit cost came at 0.9%, which has been stable at this level. NPAs have also been stable sequentially. We remain positive on Mass. Aditya Birla Capital result has improved for all segments. Uh, Profit grew 51% year on year, 7% sequentially. NBFC loan portfolio also grew by 49% year on year and 7% sequentially. The ROA and ROE for NBFC segment is at 2.5% and 18%, which is healthy. And asset quality for the NBFC, if we look at gross stage 2 and 3 combined, they have declined by 37 basis points and now stands at 5.5%. Even on AMC side, the AUM has increased 8% sequentially. And in the health insurance side, the gross written premium has increased by 22% year on year. So most of the segments have performed this quarter. We are positive on Aditya Birla Capital. Fusion Microfinance result has improved. Loan book grew 31% year on year and 4.5% sequentially. Net interest margin continues to expand. It came at 11% this quarter, which drove the sequential growth in operating as well as profit after tax by around 5%. Net NPA remains soft at just 0.8%. Management continues to hold excess provisions of 60 basis points. ROA, ROE has remained stable now since last 3-4 quarters at around 5% and 20% respectively. After credit access, Fusion is the next best in terms of microfinance companies, quality-wise. And since last quarter, stock has seen a decent run-up. But even today, it is trading at 40% discount to credit access. We see this discount shrinking to around 20 odd percent. And stock is currently trading at 2 times FY25. We think over next few quarters, it is headed towards 2.5 to 3 times kind of range. Indostar Capital Finance result is okay. Loan book has remained flattish for quite some time as the company continues to reduce the SME and corporate exposures. Cost structure of this NBFC is so heavy that the cost to income is at 79%. So until there is sufficient scale up in the loan book, cost to income will remain a problem area. This quarter there was provision reversal, so negative provision, which resulted in ROA of 2%. If we adjust the credit cost to normalized levels of 1.5% as guided, then ROA would have been at less than 1%. Stock is trading at 0.8 times price to book, and the stock has also seen a good run up in recent past. So now we suggest to be neutral on this stock. Thank you.
Good morning. Keval Kiran has posted improved set of numbers for the quarter with revenue coming in at 178 crores, which is up 15.4% year on year. EBITDA margin came in at 19.1% versus year on year of 19%. PAT came in at 34 crores. Stock is trading at a P of 30 times FY24 EPS. Quest Corp has posted below expectation numbers for the quarter, although the revenue came in line. Miss was majorly on the EBITDA margin front, which came in at 3.3% versus expectation of 3.6%. PAT came in at 47 crore versus expectation of 61 crore. Stock is trading at a P of 20 times FY24 EPS. Firstsource has posted broadly in line with expectation set of numbers for the quarter. The company has maintained FY24 revenue guidance to be in the range of 2 to 5% in CC terms and operating margin to be in 11 to 12%. Outlook is neutral. Thank you.
Good morning. Adani Wilmar Limited has posted the result and result were below expectations. The revenue grew by 12.2% on a YY basis. The largely impact was from the edible oil segment and the industrial essentials. Edible oil segment contributes to 60% of the total volume of the company, and it has grew by 27% on a YY basis during the quarter. So this was a positive sign. However, the operating performance of the segment was largely impacted due to sharp reduction in the edible oil prices, which grew by 50% from the peak of April 22 levels. And also there was a disalignment of hedging which had an impact on the operating performance. Industrial essentials revenue degrew by 16% on a YY basis. The volume growth observed at 21% on a YY basis. The food and FMCG segment, which has performed well during the quarter with 28% revenue growth on a YY basis with 21% volume growth. The operating EBITDA margin reported at 1% versus the expectation of 3.3%. The outlook on edible oil of the volume growth is going to be low double-digit growth for FY24, and food and FMCG is expected to grow at 25 to 30% in both volume and value terms. The stock is trading at a PE of 54.2 times to FY24 EPS, and our outlook is neutral. Dhanuka Agritech Limited result was below expectation. The revenue grew by 6% on a YY basis at 69 crore. This was largely due to delay in the monsoon, which led to deficit in the rainfall and affected the overall performance for the demand of agrochemicals. However, since the last week of June, the rains were good, and it has led to demand for agrochemicals over the last 5 weeks, especially for the herbicides. During the quarter, new molecule has contributed 19.6% of the total revenue. The EBITDA margin for the quarter was reported at 11.8% versus the expectation of 13.9%. The stock is trading at a PE of 13.6 times to FY24 EPS, and the outlook is neutral over the near term. Thank you.
Yeah. Uh, Apart from this, Avish, are you talking about or should I take?
So you can take.
Yeah, okay, fine. See, Ambuja Cement has done the acquisition of Sanghi Industry. Today morning they had announced, and the price is 114.22. This is done at around 94 rupees dollar per ton valuations, whereas the value of the Ambuja Cement is right now at $115 per ton. So this much discount will be there as compared to Ambuja Cement. So the further price increase for Sanghi Industry from here seems limited. one can the upsides from yesterday close of 100 looks limited, and the news was well in the market, so there will be people who will be coming to book the profit in the transaction. So one can look to exit the stock on opening. Apart from that, KSB Pump has reported very good numbers. One can look to see in that particular stock. Then Titan Industry yesterday announced the result, and result were below expectations, and mainly on account of margin. Margin came lower in jewelry segment, though company has given reasons of this as a one-off, mainly because of company has put for higher expenses for doing the gaining the market share, but the revenue growth was 20%, which is targeted by the company in normal course. So to get the 20% growth, they need to now do extra expenses. So this may be taken bit negative by the market, though company has maintained its overall yearly guidance of EBIT margins in jewelry segment of 12 to 13%. So near-term outlook is neutral. Long-term company has shown good growth in past and consistent to keep the growth at 20% plus. So long-term growth outlook continue to remain positive, but near-term may see some profit booking or maybe sideway movement. So now I'll request uh, commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So, yesterday we had seen prices in commodities correcting a bit. Uh, this could continue. Gold, one can sell around 59,550 and maintain a stop loss above 59,750. On downside, 59,200 is the support we are looking for, and for trading purpose, one can buy from 59,200 to 59,150 and maintain a stop loss of 59,000. Silver also, there could be some pullback if 72,500 is holding on. But however, on pullback 73, 200, 300, one can witness some selling pressure. So one can initiate a sell from that levels and maintain a stop loss of 74,000. Crude oil prices are expected to correct. It seems to be a profit-taking rally. So selling around 66.20 is recommended and maintain a stop loss of 6,700. On downside, 64.70, 64.50 is the target we are eyeing for. Natural gas also, one can initiate a sell around 209, 2010 levels and maintain a stop loss of 215. Um, Further weakness below 205 could be witnessed, and it can test 197 on lower end. In metal front, copper, there could be some pullback if prices are sustaining above 733. On upside again, 740, 742 is the area where again some selling pressure could be witnessed. So could be all in a trading range. uh, Zinc also, there could be some pullback till to 2350 to 24, whereby again selling pressure would be witnessed. Prices can correct further if prices are sustaining below 221, and which might lead to 218 to 17 on downside. So that's it from me. I'll ask Utkarsh to take the call forward.
Thank you, sir. Very good morning, all of you. For today's trading session, we are expecting some more upside momentum in USD INR. So if we get any profit booking around 82.50 68 to 82.64 levels, the one can initiate a long positions with a stop loss of 82.57 for the target of 82.82 and 82.92 levels. And on the higher side, one can initiate a short positions also for the intraday around 82.84 levels with a stop loss of 82.97 levels for the target of 82.81, 82.71 and 82.64 levels. In Euro INR, we are expecting a very small range bound movement. So one can initiate long positions in the range of 90.48 with a stop loss of 90.23, and on the higher side we put target around 90.75 to 90.87. And GBP INR, if prices are sustaining above 105.46 levels, so one can initiate a long positions with a stop loss of 105.14 for the target of 105.77 and 105.94 levels. Thank you.